Good morning. Good morning, everybody. Welcome, welcome. We'll give everybody a couple minutes to file in. Happy Thanksgiving week, everybody joining us. If you're a college football fan, it's rivalry week. So yep, thanks everybody for joining us. If you have any questions or individual tickers you want to go over, throw those in the chat. I'll cover those at the end of the presentation. Or if you have any questions, pop those up while we're going through the presentation. I'll try to answer them as we move along here. So give everybody another minute to file in, then we'll go ahead and get started. Make sure you follow us on X as well as YouTube. Like and subscribe there. Share our content. You'll be notified when we go live. We had a extensive open mic last night. We do those every Sunday now. That's posted on X as well as YouTube. Make sure you check that out. We went through our market trend model as well as the SPX option structure, kind of how our overall game plan is produced every day, and how we look at the option structure to give us an idea of trades. So good morning, everybody. Thank you. All right, we'll go ahead and jump right into it. As always, this is Michael coming to you from Game Edge on Monday, November 24th. Thank you, everybody, for joining us. We'll cover our three pillars here: Game Edge, sentiment, structure, and trend. Again, if this is the first time following us, make sure you like and subscribe and be notified when we go live. So we'll go ahead and jump right into it. Initially, going to look at our market trend model. Obviously, this is based on the tick index. If you followed us for any amount of time, you can research that at your favorite investing website. But the lay of the landscape really quickly is the bolded white line is the cumulative tick. This is what we refer to as our intraday or instantaneous CT. This is our shortest time frame. This is obviously for 0DT traders. Then we place some momentum moving averages, add the time series. These railroad tracks, as we refer to them, are your 1 to 3 day swing time frame. This is buying versus selling in the overall market. So the bolded white CT indicates the buying, obviously, versus selling. If you're a bull, you want to see it going from lower left to upper right. You want to see it cross back above these shorter term moving averages, obviously indicating that there's more buying versus selling in the overall market. This colored ribbon up here is our longer look back period. This is how we position for longer term money in the overall market. The red is currently below the cyan, and we have both negative slopes. So this means our mechanical portfolios, this is the gate to our mechanical portfolios, is turned off at the moment. That would be our P-Trans to PGX as well as our wheel strategy. You can research both of those at gameedge.us on our blog, or follow us in about our posts. But the bolded white CT would need to be above this this colored ribbon for our mechanical portfolios to be turned on and entering position. So as you can see, we're in a bearish state from a longer term standpoint, and we've just slightly recovered these moving averages on a shorter term standpoint. So you could give the edge to the bulls. Should be sound. Let me know if there's not. You can give the edge to the bulls on the shorter term time frame. Let me check my settings really quickly here. Yeah, should be on. Everything looks good on my side, so let me know. Sound fine here. Okay, great. Thank you. So obviously, if you're a shorter term trader, you do have a little bit of bullish look in the shorter term CT, but we'll cover these up here. This is our breadth indicator, new highs versus new lows. Again, new lows still outpacing new highs significantly. So not a large amount of stocks are being accumulated versus sold. So obviously that's a little bit of a yellow flag here. And then our institutional look, this is plus 1,000, minus 1,000 larger block orders, larger market participants, and how they're positioning transaction wise. It's to the upside, obviously 27,000 here, indicating there were more stocks on being bought than sold, but you can see the significant downside we've had really the past 4 to 5 days. So you want to see this recover significantly and start looking like positive on the upside instead of negative on the downside. And then our cumulative tick was above 0, but not significantly to the upside historically, as we've seen. So still cautionary here, as we said back here when we had the bounce to the upside right around in here, and we were trying to recover those shorter term moving averages. We talked about this highly prone to failure, and it failed very quickly once we moved back under these shorter term moving averages. If you're a 1 to 3 day trader, this would be an opportunity to short for a move to the downside. And then any bounce up to the colored ribbon, again, is still prone to failure on a longer look back period. So we'd be looking to short these bounces into overhead levels until we recover the colored ribbon, or we see significantly buying or significant sentiment change here, new highs versus new lows, or we see significant buying here versus institutional filter tick. So again, slight recovery in the moving averages, a little bit bullish on the shorter term, but longer term on the bearish, and then this could easily roll back over and turn to a bearish look very quickly on the market trend model. All right, let's move on the SPX options complex, largest, most notional value. That's why we look at it. Now we're into the December expiry on the SPX. We separate the SPXA from the SPXP. SPXA is your cruise ship. This is the steer 40,000 foot view. These are institutional positioning as the contracts don't roll over as rapidly. You'll notice we are call dominated here. If we move up in price, this grows more positive. If we drop in price, this grows more negative. The reason that is we move up in price. These are in the money puts overhead. You would drive these in the money puts out of the money and start capturing more positive delta. Move to the downside, out of the money puts would become in the money, and these out in the money calls below us would become out of the money, obviously reversing the overall addition of a negative and positive delta. Large, huge transition here that we've noticed, 67.60 to the upside. You'll notice this significant amount of in the money puts still overhead. We have repaired some to the downside. That's why we're call dominated now into December, but still not significantly. 6,000 is not a significant number. So we would want to see spot price continue to appreciate. You want to see this red net deltas continue to erode, either via closure or spot price moving up, driving those in the money puts out of the money, and to continue to see the out of the money call speculation to the upside, so that improve this overall structure. But we are call dominated, so should be supportive on pullbacks, even though we see quite a bit of out of the money put hedging. This should still be supportive as long as we're above the transition areas. If we continue to drop below the transition areas, we'd be slightly more negative and cautionary for a larger move to the downside. All right, let's move on the SPXP. We are put dominated to start the day. You notice expected move 1.39%. This is fairly high. So this, again, put dominated, negative gamma environment, highly volatile as the VIX has been rising. Also, all expiries turned on here. You'll notice the 11/28 expiry has 18%. So a significant GEX expiry as we head into this week. Transition area is overhead below 6640 would still be negative or implied to open roughly at the bottom of that or below that. And again, you'll notice the red net delta. So completely put dominated through the whole structure, really nothing bullish here whatsoever. In the money puts overhead are going to be a headwind. We have out of the money put hedging to the downside. So spot price continues to drop. We're adding negative deltas to the complex. Dealer market makers have to sell the hedge, and we just continue to the downside. 6,600 will be a key important level that we continue to try to hold to the downside if we see any bounce, and then we need to at least get through the transition area overhead at 6640, and then we have 6685 overhead. All right, moving on to SPXP delta balance. This is separating the left-hand plane and right-hand plane from the overall structure. Left-hand plane is the red dotted line. That's below spot price, as we talked about. So that can be in the money calls or out of the money puts. The green dotted line is your right-hand plane. That's out of the money call speculation or in the money puts. And the blue dotted line is the aggregate of both of those together. So what we want to see, obviously, is the green and red line moving above zero. That would be indicating we're moving into a call-dominated state instead of maintaining the put-dominated state. And you'd like to see the delta balance rising above zero. Again, more call-dominated and more positive gamma, bullish overall outlook. As of now, the left-hand plane is the only one that is slightly above zero with the positive slope. That would be indicating in the money calls below us, as I've already discussed. Those can be supportive, but we're not really in a completely bullish overall structure and sentiment on the left-hand plane. So it's easy, could flip back to the downside. Right-hand plane, virtually hardly any out of the money call speculation. So you have to have out of the money call speculation to the upside. The spot price does not go where the speculation is not. So again, this is maintaining bearish look, put dominated, as I've said, in the money puts overhead below zero and the delta balance below zero. So we're still in an overall bearish structure, put dominated, edge to the bears so far. And then even on out into next week, these are further expiries projected on out in time. we see a slight improvement, but then an overall weakening state into the 1st of December. So we'll have to watch this into the month, into the 1st of December. Really not an overall rosy outlook projected on out in time, or much improvement with the overall positioning of market participants. Still bearish as we head into the beginning of December. All right, moving on the SPX GEX ratio. This is like a put call ratio, but we add a time component, which is gamma, which is short dated call gamma versus short dated put gamma. So again, that key one line is where we move from a put dominated state to an overall call dominated state. We're still below that one line, so it edges to the bears, as a short dated put gamma is overriding the short dated call gamma. So again, a slight positive slope, but we're still below one. So overall bearish state within this SPXP. So if we do see a rise in the spot price, we need to see this resultant rise in the GEX ratio, indicating call speculation, out of the money call speculation is coming in above spot price, and the in the money puts are eroding, as well as in the money calls taking over those out of the money puts below spot price. So we'll continue to watch this, but as of now, even with a slight improvement, we're still in a bearish state via the SPXP GEX ratio. Good morning, Tom, George. All right, heading into the net stack command. This is the high sensitivity levels for today. Denote here, this is 4 days. This is 0 to 4 day expiry, as denoted 11/24 to 11/28. As I discussed, 6750 upside key area overhead. Significant amount of in the money puts. These will continue to be a headwind for price appreciation. You'll notice to the downside, 6,000 in the money calls, 6,600 is our charm level. Out of the money puts here, these will continue to be supportive, but 6,700 overhead. If we're below that level, out of the money calls, those will continue to be a headwind. As of now, we're above that 6,700, so we'll continue to watch that. And then gamma and Vanna on the 0 to 4 day. I'm going ahead and move on to the 0 DTE. Same thing, almost 2x in the money puts overhead, even though those are 6,800. You'll notice out of the money calls versus out of the money puts here. Again, this is a headwind if we are below 6,700, and then out of the money calls here, gamma, and then as well as Vanna. We do have an overall positive Vanna possibility, not really significant though, but if we're above 6,700 and we continue to add out of the money calls, this will help us be a tailwind. So just an overall resultant, basically push-pull structure back and forth within the money puts overhead, in the money calls below, and then the same with the overall charm, gamma and Vanna. So a significant amount of price appreciation is most likely going to be difficult. Key takeaway, I think I've said that, and we beat that to a dead horse, but we'll just continue to watch the overall structure to see if sentiment and structure change throughout the week. All right, let's move on the SPXP 0 DTE. I've labeled some secondary entry points here for today. Again, these are within the overall DS. So we talk about being extremely choppy and butt in the seat trades if you're within DS or as well as transition. We start the day put dominated. So again, significant red net delta overhead will continue to be a headwind. Key areas to the downside, 6625, that's the transition level. Bottom drunken sailor range, 6610. If we're below those levels, most likely you will see some overall weakness down towards the 66, 65, 65, sorry, can't spit that out this morning. And then within the overall transition, as well as the drunken sailor range, extremely choppy. Above transition 6670 or DS, I would look for 6700 to the upside. Most likely be an overall area that we'd see some stalling. We continue to see 6650 this morning be that area that we're seeing price rejection. And you'll notice this is extremely low exposure areas via the net OI. So we'll be driven by the intraday vol M or intraday call versus put speculation. And we'll be watching our vol M command. That just stands for volume momentum. That basically tells us where market participants are transacting. We've been posting that overall movie every night on X. Make sure you check that out to show the direction of transitions. And our trend down day, it was extremely clear, as well as trend up days. And then if we have a crossing of those two centroids, it's most likely consolidation day. So key takeaway is transitions are fat and wide. This is basically leading to increased volatility. As you'll notice here, expected move is basically double what we normally see. And then market participants, we do not really have a good handle on the direction of market participants due to this extremely wide transition as well as drunken sailor range. But below, we would expect more weakness. Above, possible appreciation towards 6,700. All right, let's move on to our trading view chart. Okay, so we've already tested 6650 again, and we're trying to drive through that this morning. So key area there, and then transition area overhead 66.65, and the top of DS 66.75. So that would be areas we'd really look for some stalling. If we reject those areas, an opportunity to short for a move back down. But if we do overtake these areas, then an opportunity for price appreciation up towards 6,700, depending on what we see with intraday vol metrics, as well as call versus put speculation. And then I'd anticipate us to stay above these lower levels, 6,600 and 6,625. Continue to expect those to be supportive, unless obviously we have a significant change with out of the money put speculation. And the other, again, make sure you're understanding the market trend model for today. We're starting a little bit positive state here with the bolded white CT above these moving averages, but we're below the colored ribbon. So again, anticipation is that's prone to failure until we take back the colored ribbon. So hopefully that helps everybody for today. Let me know if anybody has any questions. Again, gameedge.us. Check out our newsletter, put in your email. You'll be delivered everything on the weekend via our tools, strategies, as well as overall thesis. And then our free courses, Game Edge Fast Passes, has all of our education for free, everything that we cover here in the morning, as well as what our market, where our members are, as well as what we go over on our open mic. So if you want to get up to speed, check that out. And you can check, go through that at your leisure, all for free. So absolutely. Tesla, yeah, let's check out Tesla. So go ahead and throw the tickers in there. We'll be happy to go over them this morning. Again, thanks everybody for joining us. So Tesla call dominated still on the 11/28 expiry. You notice I've had this shorter term expiry on for our web app. So again, significant puts overhead though, even though we're call dominated. You see PGX at 410 and COI at 410. So upside level, that would most likely be where we would look for that price target to the upside. To the downside, we're within transition, and then 390. I would look for 390 to be supportive to the downside. But within the overall transition area is probably going to be choppy. But if market cooperates, I would look for 410 to the upside. All right, all expiries on Tesla. We do see PGX, and PGX actually up at 500. COI really off the page, so non-existent there. 450 overhead, still call dominated. So Tesla should continue to be supportive within the overall structure, depending on what the market does. But Tesla actually still looks fairly good compared to the other stocks that really have completely fallen apart on the tech side. Amazon call dominated still, all expiries, so still looking decent. You'll notice the green net delta, significant support there, which is good. Above spot price, which is, or sorry, above transition, which is supportive. 250 to the upside, PGX and COI. Let's look at this expiry. 225 PGX, COI 235. So upside appreciation may be a little bit difficult there. And then after this expiry, about the same. So not much upside through this expiry in the end of December, but the all expiries on out in time looks good on Amazon. All right, let's check NVIDIA. Thanks everybody for throwing the tickers in here. Appreciate it. NVIDIA still call dominated. Structure looks good. You're just at the top of transition, so I'd like to see this be supportive and stay above transition. 200 to the upside, still market speculation there. I think that's probably the upside target for NVIDIA on out in time. Short term this week, 187.50 and 200 still. Let's see what happens after this expiry. So then PGX and COI move up to 200. So 200 still looks good on NVIDIA, even though obviously short-term weakness, but structure and sentiment still look good on NVIDIA. And I'm still in that boat. NVIDIA looks good for 200. You know, probably through the end of the year, beginning of beginning of 2026, as long as the market cooperates. But still looks good on NVIDIA. Really no change. No change for my positioning either. I'm still holding NVIDIA, so no change there for me. Short-term expired GLD 378. You're at the bottom of transition, so you need to see transition recovered. Still call dominated, so that is supportive. GLD obviously has Monday, Wednesday, Friday expiry. So 377 to the upside. We do see PGX or COI move up. 374 transition area above transition. Let's do this full week. So GLD supportive, call dominated. 377 to the upside's PGX. So that'd probably be the most likely peak on price. And you see COI down there at 373. So stay above transition, you'll be fine. And 377 to the upside on GLD. Still call dominated though, so that still looks good. Let's check out Microsoft. Call dominated. We do have significant puts overhead though. So that's going to be a headwind as compared to what you saw on NVIDIA, right? Totally different there. You're at the bottom of transition, so weak there also. Let's see what Friday expiry looks like. Transition, bottom of transition, significant puts overhead. So price appreciation on Microsoft's probably going to be difficult for the week. PGX 490, CY 500. Transition moves up and 500 PGX and CY. So the structure does advance, but you see this significant in the money puts overhead. So it's going to be a headwind unless this changes. So that's why I'd be watching for an overall change. And you're put dominated in the beginning of December as well as this expiry. So again, price appreciation going to be difficult on Microsoft compared to NVIDIA. So that's why you want to look at if you're looking for stocks to be in when the market decides to bounce, Microsoft would not be the first one I'd go to. NVIDIA structure and sentiment looks much better. So NBIS. Total OI, okay. Call dominated, below transition, that's weak. Significant puts overhead is weak. Let's see what this looks like. Put dominated NBIS is weak in structure, not upside speculation, out of the money speculation to the downside. In the money puts overhead just does not look strong at all, if that's what you're looking at. Below a very wide transition into December expiry. So again, this transitioning widening is not conducive of upside movement. So weakened overall structure there on NBIS. Hope that, Jay. Awesome. All right, everybody. Thanks for joining us. I appreciate the interaction. Absolutely. Yeah. We appreciate the interaction. Again, like and subscribe on X and YouTube. Share our content. And come join us in the Discord. Our community is rapidly growing, and we appreciate it. Just traders from all backgrounds. We want to continue to show you. Yeah, absolutely. We kind of want to continue to show you how to use our tools to navigate the SPX option structure and be profitable. And then we're live in the Discord every day, helping our members get up to speed and answering questions. Then we obviously have the open mic. So that's our whole basis is education, helping you become a better trader and not rely on a specific service or us as traders, also empowering you with tools to navigate the SPX option structure, as well as individual equities, also significant individual equities trading community. As you notice, we go through those also. So, all right, thanks everybody. Have a great day. As always, manage risk. Let's take a quick look towards the end here. 6650 is going to still be a key level, even though it's basically neutralized from an OI standpoint, but a TA standpoint, a round number, half number, it's going to be important. And then if we get through 50, I'd be looking for 65 and 75 to the upside transition, as well as DS. And then if we fail, let's look for 66.25 to the downside. So thanks, everybody. Manage risk as always. Make it a great day. See you later.